Stock analysts, the so-called experts, they are always giving us their predictions. But have you noticed? They are always wrong. Even if one gets a prediction right, more often than not, the next time they make a prediction, they get it wrong. It's time to debunk their flawed methodologies and unreliable advice. First, stock analysts rely heavily on historical data and market trends. Yet the stock market is a fickle beast, always changing and reacting to new information. So, how can past performance accurately predict the future? It can't. While it is true that while history doesn't repeat itself, it often rhymes, most analysts pick the wrong time to compare to the present. As a result, a stock will skyrocket when the analyst says it will sell off, or a stock will plummet right after an analyst tells you to buy. Second, analysts are prisoners of groupthink. Most will follow the herd, looking at the same data and arriving at similar conclusions. This creates a dangerous echo chamber where they reinforce each other's flawed beliefs. Instead of thinking outside the box, analysts often raise their price targets to catch up to a stock that's rallying, or lower their price targets on a stock that's already been cut in half. How is this useful? Third, analysts are susceptible to biases and conflicts of interest. Some may have personal investments in the stocks they're covering, which will lead them to provide biased opinions. Think about any gold bug or Bitcoiner you've ever seen on YouTube. If they own the asset they're talking about, somehow it's always a great time to buy, even if it's about to sell off dramatically. And finally, let's not forget that stock analysts are humans. They make mistakes, misinterpret data, and get swayed by emotions. Their predictions are just that. Predictions. They can't foresee unexpected events that can sway markets in an instant. So next time you hear a stock analyst's prediction, take it with a grain of salt and don't blindly follow their advice. Instead, do your own research, diversify your portfolio, and think long term. Trust yourself, not the faulty predictions of these analysts. And remember, stocks can only go in one of two directions, up or down. So plan for both directions. If you make a plan in advance for what you will do if your stock rallies or crashes, you won't be caught off guard. Stay informed, make wise investment decisions, and remember, you are your own best stock analyst.